All right, so this is going to be a quick Tattoo Chef update post earnings. I still sound a little bit nasally, so forgive me. I'm still not 100% yet, but I'm sure I'll be back to normal by Tuesday. I reckon by Tuesday I'll be back to normal. But I have had a lot of you guys reach out to me on YouTube in the comments, on the Instagram, on the DMs, just to ask for my opinion with regards to how I felt earnings went. So for me personally, I spent the weekend going back to One Up on Wall Street. Reading it by Peter Lynch, One Up on Wall Street by Peter Lynch. Started to reread it again. In the early chapters, I mean, you find this. It says, if a stock is down, but the fundamentals are positive, it's best to hold on, and even better, to buy more. So if a stock is down, but the fundamentals are positive, it's best to hold on, or even better, to buy more. Now, with regards to Tattooed Chef, we now have to ask ourselves the question, has the fundamentals of the business, have they improved or have they gotten worse in the most recent quarter? I'm going to refer back to the earnings call transcript and just make just 2 points. All right, 2 points that are strong indicators that the fundamentals are not only still intact, but the fundamentals are also improving. Okay, so this was Sam Galetti's speech. He says, as you may recall, our guidance for the full year with 10,000 stores with 65,000 points of distribution, right? So that was their guidance. With the additional retailer commitments our sales teams have secured, which I will cover in a few moments, I'm proud to announce that by the end of the third quarter, we'll be in over 12,000 stores with 79,402 points of distribution. So by Q3, we would have already smashed our full year targets, which is absolutely insane. So with 12,000 stores, 79,000 points of distribution by Q3, that should put us in the front of more customers with more opportunity for them to buy our products. And that should translate more sales going forward. Now, the second point was Sam Galetti said we will also be launching our first ever refrigerated ambient products early next year. Okay, this acquisition expands our production capacity and diversifies our manufacturing capabilities to accelerate our expansion throughout the entire store, not just frozen. And this has been the main argument from bears, is that Tattooed Chef is just a frozen food company. And that's just simply no longer the case. Now, let's take a quick look at our Tattooed Chef spreadsheet, okay, courtesy of Scott from my Discord. If you want access to this full spreadsheet, you need to join my Discord group. The link's in the description below. Here we are for our store count. We're already ahead of schedule, at 12,000 by the end of Q3. And we are estimating now going forward that by the end of Q4, we'll have about 16,000, close to 17,000 store counts. All right, so that's good. So from the fundamental standpoint, the business is not only intact, we are actually ahead of schedule, which in my opinion, I would deem that as a positive and something to look forward to. Now addressing the elephant in the room, and that's the total revenue. In Q1, we had 52.6 million in top line. And of course, we missed the analyst targets of 53 million and we reported 50.7 million. So that means we're going to essentially need to really smash it in Q3 and Q4 to be able to meet our full year guidance for 2021. And Scott has the numbers here. So Q3, we should be expecting 68.5 million. And also by Q4, we should be expecting 73.9 million in top line. Okay, so I know at the moment it seems like a big ask, especially trying to deliver 63 million in Q3, considering we only made 50.7 million in Q2. However, I'm not trying to make excuses here as to why we missed our top line. If you take a look at our financial history from 2019 to now, Q2 has really been our weakest quarter. Okay, so going back to 2019, Q1 we reported $17 million. And then look, Q2 we actually dropped. So we reported $16.3 million. Now fast forward to 2020 and we did see an increase in Q2 over Q1, but it was very, very slight. I mean, it was a slight increase, just if you want to give it that. We just beat Q1 in 2020, and fast forward to present day, of course, we couldn't beat Q1 and our Q2 was much lower. So historically, Q2 has been our weakest quarter, but if you look at Q3, here we reported 24 million, right? That's a huge jump from 16 million in Q2 2019. And it's a similar story in 2020 with Q3 jumping from 34 million to 41 million. And then we dropped again in Q4 to 39 million. Now, granted, this is a small amount of financial data that we have at our disposal. I mean, only 2 years worth. But if you are to look at the trend over the past 2 years, I would say Q2 has generally been our weakest quarter. And we recovered strongly in Q3, as we saw in 2020, and Q4 couldn't beat Q3. All right, so that was in 2020. So if that trend is to continue, then we should have a blowout Q3 if the previous finances are anything to go by. Now, what does that mean for the stock itself? As you can see, Tattoo Chef absolutely gapped down on the Friday, the trading day, and continued to tank throughout the rest of the day. Testing the Fibonacci retracement at 78.6% and also closing below that. So there's a heightened amount of selling pressure on this stock. Wall Street did not like Q2, and nor did a lot of retail investors. They didn't like Q2, which again is fair enough. Now, what am I going to do in this position? Now, did I buy the dip on Friday? And the answer is no. I'm not trying to catch a falling knife. I do see support at $15.42. So that's the 100% retracement. It's a level that we have tested before. We tested it back in May when the CFO left. So I think for me personally, I'm holding fire. I'm not buying anything just yet. And I'll continue to monitor the stock. I do have certain levels, certain price points that if we do reach, it will be intriguing and it will be cheap enough for me to buy. But for now, I haven't bought any more stock just yet. And I'll continue to monitor the stock. But more importantly, I'll continue to monitor the business. Now, I do have some updates with regards to Celsius Holdings, Palantir, Hims, Sonos. And also I did start a brand new position. So all of that will come throughout the week. I thank you so much for taking the time to watch my Tattooed Chef update video. My views have not changed. The fundamentals are more than intact. The fundamentals are positive. Peter Lynch said it best. If a stock is down, but the fundamentals are positive, it's best to hold on, or even better to buy more. So I'm going to leave it at that. If you gain any value, please make sure you smash the like button. Hit the subscribe button if you're new to the channel. Thank you so much for watching, and I'll catch you in the next one. Peace.